Gold prices continue to move higher, albeit at a slower pace given all the headline news we got today. The big headline obviously comes out of the Middle East, where an oil tanker was attacked, suspected it was Iran, and we heard from the Secretary of State. Gold prices really shot up. We did not get to those year-to-date highs, nor did we get to the levels we saw last week in the August contract. However, we are headed that way, and looks like in the short term we could get there pretty easily. A lot of times these rallies move very emotionally, very quickly, and my sense is now that gold prices have some upside to them, given the fact that we've got this geopolitical risk rising in the Middle East, given the fact that the Federal Reserve is likely to be cutting rates sooner than later, and given the fact that the economy maybe isn't quite as strong and moving as fast as everyone thought it would at this point in the recovery. So right now, gold prices nearing that 1360. That was the high of the August contract this year. We haven't gotten there yet. We're hovering around 1345, but I do believe that we will be headed higher in the days and weeks ahead. And that will continue as long as the headline news continues to propel it higher. So it isn't just about the Middle East. It's about all the variables we've been talking about for a long time. And if you look at the bond market, the flight to quality bid continues there. So riskless assets have outperformed here today. Even though stocks are higher, they're not as high as what we're seeing in gold and what we're seeing in bonds. So bullish momentum comes back to gold after a brief hiatus, we'll call it, and a bit of a pullback from the recent highs. The U.S. dollar, the U.S. dollar was off its lows today as well. So we saw that tandem move in gold and in the dollar, both moving up today. But the dollar's move was a little more lackluster. Obviously, there's a lot of political rhetoric behind it, and there's going to be continued upticks in the dollar. But I think in the longer term, if the Federal Reserve comes in to cut rates, and if we see the economy staggering, that the dollar will suffer. And I think that means that these upticks are probably going to be welcomed to dollar holders or sellers who want to come in and either exit or get short. So I think at this point, the dollar upticks will be watched very closely. I think there are weaker days ahead for the dollar, which again will only add to the momentum that we're seeing in gold prices right now. And last is, look at those speculators. Boy, did they get in at the right time. We saw that big move last week, them adding to be year to date the longest they've been in a long time, and I think that will continue. We'll see them adding on this move higher. Now, we won't get those numbers obviously till the end of the week, but I think at this point, the speculators are in for the longer haul. We may see modest pullbacks in them exiting, but ultimately they're going to remain core long here as long as tensions remain high and uncertainty even higher. So right now, gold prices likely headed to 1360 and above in the August contract. Spot gold right now hovering around 1340. It has yet to get to its year-to-date high near 1350. So again, we're seeing gold prices nudge higher. Riskless assets are going to continue to outperform as uncertainty and now geopolitical risks continue to rise.